So they got me. Welcome to a market. No, not market recap, trade recap. Today we had a loss. Today my boss was wrong. And in my Discord, I did say was an experiment that there was something wrong with this, right? Let me go get up. Let me go pull up the photo. I did say this is a low probability setup. It's not a really high probability setup, more of an experiment because it's more of an experiment side because after the discount gets tapped, the market needs to close. Then we have a CRT. In this case, we tap discount and without the candle closing, and we're trading another CRT without letting the candle close. And that wasn't the problem. The problem was the bias. We were supposed to be bearish. As I said in my weekly market update, not weekly market, I said my weekly weekly market forecast. Do I say forecast or market update? Weekly market forecast for DXY. DXY was fucking bullish, right? So it was for me confusing. I was like, I analyzed EU and I analyzed DXY. DXY looked bullish, and you guys gotta keep in mind, you analyze DXY TradeGeo. I didn't say I trust DXY more on a longer term basis, but short term, I thought me analyzing EU is better, but seems not, right? Because DXY was much better to perform. And it was giving us clear signs that it was to go up higher rather than going lower, right? So the EU analysis didn't really make sense to me. I was like, why is EU telling me gonna go higher? Why is this good? Why is it saying weekly IRL to ERL, right? It didn't make sense to me. But now looking back to it, we had a weekly ERL S&T back to IRL, right? And the weekly ERL, right? The restriction block, the weekly ERL didn't get tapped, so I was still gonna go, bearish regardless. But if he tapped the, if he taps the if he taps the Mappa 1 or like the weekly auto block that prints out liquidity, and for my weekly IRL as an auto block, I primarily use the weekly auto blocks that purge out liquidity. In this case, auto block purge out liquidity, so it's a weekly IRL. So we went from a IRL back to ERL. Right, so we did a weekly S&T ERL back to IRL. Although I didn't really care about the S&T because I'm still gonna shut it down. Why? Because the rejection block is gonna be the ERL whenever there's S&T, then go back to IRL. But in this case, market went right back up, tap the IRL, right? Which is gonna play the rose or IRL. So we're going go from a weekly IRL back to ERL. So now we're gonna invalidate this, S&T or the weekly time frame and go down here because this was the first candle that had S&T, and we definitely want to go down here. So my higher time frame bias was overall wrong because DXY was telling me, bullish signs, while EU was telling me bullish sign as well. So it didn't make sense because they're supposed to be inverted, right? It's supposed to be DXY bullish, EU bearish, not bullish, right? It doesn't make sense. So that's why I was fucking confused about this, this whole analysis. I was like, it doesn't really make sense to me. I have to possibly reanalyze, but I did reanalyze after the loss. I was like, first, my boss was wrong. Second, one thing we're gonna talk about is about daily ranges, right? And third, we're gonna talk about my Model 1 entries. So, higher time frame was wrong. We should have not traded today. We just sort of let the market breathe because our setup would have happened on this Thursday. If we go back the day before, on Monday last week, when the Monday had a weekly S&T CRT, when Monday purged out this, when the Monday had S&T with this high, we would have not traded that day. Why? Because we closed above the 50% mark of the rejection block. It's high to go hit the high, even with this S&T, right? So this is how it's gonna get reversed. So once after that guy gets purged, this is a classic expansion profile to the upside, Monday low of the week. So as you guys know, Thursday and Friday caps the weekly range off. So we're gonna wait till Thursday, try to catch that Thursday move to the downside. Eventually Thursday was the one to deliver to the downside here. Right? Beautiful sell. See, chat, we're making mistakes, but we're not making mistakes, we're just learning, right? Because I have no worries, right? I can lose a lot of money in Forex. I couldn't give a shit because it's not that much at the moment, right? The reason it's not that much, I still have not been approved. And these losses are just, you know, bettering me because I'm making much more money on fucking real estate and I'm making much more money on crypto. So I could lose a lot of in Forex. It doesn't really fucking matter because it's just a low capital. But yeah, that's the whole reason why I lost. My boss was wrong. So our boss is supposed to be bearish. A weekly IRL back to weekly ERL, right? And the monthly candle needs to close at a fair price. Market, the candle was all over here. A candle does not close like that, right? So it needs to close in a fair price. So it needs to go back down. It's because this was a classic monthly candle, right? Since a classic monthly candle, it needs to pull right all the way back down, right? So that was one of the next lessons. Now going back to the higher time frame once again, we have this supposed to be bearish, but we had no setup today. We did have a setup on Thursday last week. As you guys know, Thursday caused the high of the week to be formed. So Thursday is a good reversal point, and Thursday is when we're looking for a pop of a high, then break down below a low. You see we had a return of the high. Now looking for break below the lows, then push that shit down. Today you have the same thing. Market did go and pop over a old high on a daily time frame, but that old high didn't have any setup, so I couldn't take it because I don't trade before New York session, as well as only time I trade before New York session is if it's a higher time frame OTE key level trade. Otherwise, I do not. So yeah, let's get straight into it. The lesson number one is my higher time frame bias is wrong. Trust DXY more because if EU is making me confused, DXY is gonna tell me it's true story because DXY is much more important than EU. I could pull up the tweet on this. This one cool ass guy. Bring it up. Let me get the tweet on this. 1 second, chat. Let me get the tweet. One second. Can I find the video real quick? Let me go and see if I can find the video. Oh, did the wrong thing. You see right over here, DXY is more important than EU. Right, so we're supposed to trust DXY much. This is from Romeo, right? So DXY is much more important than EU. Because EU looked fucked up. EU looked bullish. DXY looked bullish. So this year gotta be bearish. That's what see fucking GU, EU is plummeting. Let me get that other post of it. This is so true. Out over here. Analyze on DXY, execute on EU. And when you analyze on DXY, what he means is a daily time frame, right? Analyze a daily time frame. Don't analyze the fucking, 15-minute and execute on a fucking 15-minute EU, right? That doesn't work like that. On a higher time frame basis, like 4-hour, daily, weekly. Trust DXY more than EU, right? So that says about itself. EU look bullish to me, but DXY look bullish to me as well. I was like, doesn't make sense. So I thought, okay, I got some cool ass theory. The theory was trust EU more than DXY on a lower time frame basis, but it's wrong. DXY always comes first when trading EU or gold or whatever, right? Gold, he has his own, although in the longer term basis, though, gold does compete with DXY, but in a very longer term basis, right? Which I barely analyze DXY for gold. I do analyze it in the longer term, like 3 month, 4 month, 6 month time frame, but lower time frame I do not. So what we have here is we had a wrong bias, and I just told you guys. So we have to. So the lesson number 1 is prioritize analyzing DXY more than EU, because DXY is more than EU. We should be analyzing DXY and executing on EU because the same fucking period they move the strongest, right? They're literally always the same movement. And the next lesson is whenever there's a daily range and the market taps a premium daily range or discount daily range and our point of interest, once it taps it, we have to let the candle close. I have to let the candle close after the market taps the daily range. After it closes and taps the daily range, then after the close, then we're looking for a dump on our old low or a pop old high, then trade. Otherwise, no, because when it taps it, usually a danger zone, because that candle could be a range, right? The next candle could sweep it out or SMT with it and go up higher. So that's the next lesson. And then the next lesson of that, on top of that, is if we go back to Thursday, beautiful shorting opportunity on Thursday. Following well on Thursday, you can see our model 1 got tapped way beyond 11 a.m. Were we still valid to take that trade although it tapped the model 1 way beyond before 11 a.m.? We're still valid. Why? Because Thursday, the market cycle at a fair price, so it needs to go right back down lower. So what we had here on EU last week, there's not a bad high, so looking for it to get purged. When it got purged, problem this like this above this old high, these fair value gaps here, man. Total these fair value gaps. We don't give a shit about it because there was no VAD high there, right? So the VAD high got created, but when the VAD high got created, it already got tapped, so the fair value is invalid. Now we're looking for a model 1 itself. It would a resistance block entry or the model 1 itself, right? Nothing else. So in this case, you can see VAD high got purged. We had the right model 1. After having the right model 1 here, you could see we had the right model 1 here. You could say that, or you could say this as our model 1. At the right model 1, eventually we tapped it, then we eventually went down lower. So since the model 1 is so big, we need to retrace the 50% mark of the model 1. We tap the 50% mark of the model 1 eventually, then we forward to limit to the downside. And from now on forward, as I said, I started a video, we're going to be talking about model 1s. The only time I'm ever going to trade a model 1 is when it's a big bulky candle. In this case, these 2 consecutive candles are combined, right? So they're big and bulky candles. So since they're big and bulky candle, I'm going to use these 2 candles. I'm going to execute these 2 candles. Why? Without directional block. Why? Because they're bulky candle. And I just literally, if you go to SOT of, if you go to chapter 7 of SOT from Romeo, you're gonna see you're gonna hear him say, expect the directional block to get tapped most of the time if there's a big wick, but don't expect to get tapped if there's a bulky candle. It's because it's a bulky candle, so don't expect the directional block to get tapped. So this is a big bulky candle, and this is only when it's a big bulky candle. Let's just say there's like small wicks, but the candle is not that big. I'm not gonna enter the trade on the model 1. I'm gonna wait until I get the directional block, right? Because the candle is not that bulky. And in order for me to enter the model 1, it needs to be a big bulky candle. In this case, it's a big bulky candles because 2 consecutive candles. Since they're big bulky candles, we are good to execute on that. Eventually, it's gonna so big, it's gonna highly likely tap the 50% mark. And you probably heard, you probably wonder, like, you're probably wondering, so if you enter at the start of the model 1, you're gonna have a really bad RR, right? So you're gonna enter in a threshold, yes. So the only way I'm gonna enter, like I said, model 1 was a big bulky candle, but I'm not just gonna enter model 1 itself. I'm gonna enter in a threshold. because it's a big bulky candle. The 50% mark is more often than not going to get traded too. You got traded too, then we plummet to the downside, and we're going for a big RR here, right? So very, very immaculate big RR. If you guys go to 14.6, whatever there is, and you just short the shit down to, this is like insane, right? And probably know this may look hindsight. Yes, it is hindsight, but this is how it's supposed to be going, right? Probably wonder, well, what about these other days? You know, because I said my last week bias. I said I said last week my last week bias was wrong, but I found out that it was actually correct, but the time was wrong. Because on Monday last week, when we had a turning opportunity, we couldn't be executed because obviously market's not gonna go all the way back down here. So she's not gonna go all the way back down here. But well, what if he does? It's fucking clearly not, right? It's a big ass, but market cannot close in a fucking hammer candle, right? It can't. There's only 6 ways of how a candle can close. This is a classic bullish candle, right? So market can't go all the way down. It doesn't realistically make sense. So it doesn't make sense. We don't execute during that day. Oh, it's supposed to look for a trade. Why do we not look for a trade? Because you can see on this day, we are clearly closing above the 50% mark of the original block, and we're clearly closing above the start of the original block. That means this high, even with this SMT, is going to be disrespected. Eventually, after that, this is a classic Mr. Profit upside, Monday high of the week. So as you guys know, Thursday and Friday caps the weekly range. So Thursday usually a reversal. Wait till Thursday, then eventually on Thursday, if we get a regime of a high, then then eventually if we respect the regime of a high, cool, then we're gonna be bearish. But if we don't get a respect over the high and we just go up higher, then we'll be bullish, right? So simple as that. So that's how we could have gone out of the last week. Because my last week watch was actually correct. It's just that my fucking dumbass didn't pay attention to the time. And lesson learned, right? I'm in my chat. I'm not losing that much money here. I'm losing fucking $50 to $100 max, right, per trade. It's just nothing, right? I'm getting these valuable lessons, right? You gotta. I'll take that shit any time of the day. I'd rather take that than me fucking losing $10,000 in a crypto trade, right, bro? Crypto is, I trade way much higher time frame, but I'd rather do this, lose $50 or $100 per trade, than fucking lose 1,000, 2,000, 4,000, 8,000, 10,000, 16,000 per trade on a crypto trade, right? And the crypto trades are fucking long-term basis. As you guys know, the market's fractal. Same that happens in lower time frame, it happens at higher time frame. Doesn't happen at higher time frame. Now, extracting this lesson, I could use it on my crypto trade, right? So eventually in the crypto, if it happens on a higher time frame, I avoid those bitch ass problems, right? So simple as that. That's the lesson. Lesson number 1 is I always prioritize DXY over GU or EU or anything else. I always prioritize DXY over EU. DXY is more important than EU. I analyze DXY and I trade on EU because DXY tells the actual story, because EU is more of a secondary, right? Because EU could be bullish, you could show you clear signs of bullishness, but DXY is the big boss. How? Because DXY is a world currency, right? So DXY is a big boss. We purchase DXY is more important than EU, as well as the next lesson is the only time I'm gonna enter on Marble ones, and when I say Marble ones, it must be a big bulky candle. And when it's a big bulky candle, I only enter in a threshold. So I'm only entering on first total soup, second Marble 1 if it's a big bulky candle, and I'm entering on a threshold of the Marble 1. Third is the resistance block if the Marble 1 is not a big bulky candle. Third is higher time frame OTE key level trade. Otherwise, I'm not taking any trade. And people wonder, well, why you keep on switching your strategy? Why you keep on switching your entry position? I have not. You can see they are aligned, right? They're not, fucked up, right? They're not. They make sense, right? So first total soup, second Marble 1, third high time OTE key level trade, right? And Marble 1 it has most majority of the time a resistance block entry, or if the candle's big bulky candle, I'm entering the threshold of the big bulky candle and take it on, because usually your model ones won't give you a luxurious entry. If a market tells a model one and gives you a instant reaction, goes to your direction, those reactions are luxury, right? They happen very rarely. Since they happen very rarely, we're looking for the common version, right? So the common version is gonna be what? It's gonna come back down to it. Right? Gonna come back down, hitting up model one multiple times. Because why? Simple. Because the model one is basically OT, and inside the model one is where the market makers are accumulating. So you should expect your model one to get retraded more than fucking 100 times or a lot of times. You should expect your model one to get retraded to more often than not. So yeah, that's the next lesson. Last lesson is whenever there's a daily range and the market taps a point of interest, either the premium or discount. After it taps the premium or discount, I'm gonna let that daily candle close. After letting the daily candle close, we're going to eventually then look for a dump or a pump above an old high or below old low. Then eventually look for a long or short afterward, after having the model one after the candle closing. So that because of that, even though our boss was wrong, could have saved our asses, right? So yeah, thanks for watching. In this case, I knew there was something wrong on this trade before I even took this trade, right? I was like, it's a problem here, but I'm not gonna fucking, because if I were not to do that, I would have never known that. If I would have never known these lessons, right? If I didn't do that, I would have never ever known these lessons. As I said before, I'm only losing $50 to $100, right? They're losing shit. It's nothing, right? In crypto trades, I'm losing thousands, right? So I'd rather take this shit, lose 50 and 100 and lose thousands, right? And in the future, I will definitely have larger position, but this right here is perfect for me at the moment. And yeah, thanks for watching. Just guys like, comment, share, and description below. And probably wondering, well, like, how are you gonna take this to crypto? Simple. All of this, as long as the candle, they're all the same, right? Same mechanics happen on crypto. Same mechanics happen on gold. Same mechanics happen on EU. And the reason why I'm saying, and once again, chat, the reason why I'm saying that whenever I take a discount, I have to let the candle close. I have to let it close, right? Let me show you guys some example. After they tap a discount, we have to let this candle close. Since if we did not let it close, we took a look, because there's a CRT here. Since if we did not let it close, we take a trade inside of it. Guess what? We get stopped out. All right, let's just say there was no setup here, right? But something could be a setup, but today could stop us out, right? So after tap the discount, let this candle close. Then since now there's a difference in CRT because we take our first, so now we have to let this candle close. So after this candle close, then this candle is when we're looking for a setup, right? This candle closed. Eventually this candle was the one to tell us our story, and eventually go up higher. So we have another daily range here again. After this candle gets sapped, let this candle close, because we had a CRT here. We don't want to fucking long up a CRT. So this candle closed, long this shit up, go up higher, tap the target, and eventually come back down lower. But I don't think I had a setup this day. If it goes to lower time frame, I don't think I had a setup here. I think I did. Pretty sure I should have not though. So 5 AM came around, market went all the way down. Nobody had no setup because right when it goes below the 17 o'clock low, a boss invalidated because the 5 AM high, the 5 AM at the high, and then eventually for negative reversal, I need the 5 AM or the other candle highs to be protected. In this case, the 5 AM high was the high. And eventually for negative reversal, we do need the legislation or the agency highs to be protected. In this case, they're not protected. So this day we're not trading. The next day we're trading. Boom, long that shit up. That eventually that was the one to deliver and not draw liquidity. Simple as that, right? Nothing complicated. Thanks for watching. This is why we let the candle close after taking a discount. So yeah, see you guys later. Peace out. Quick lesson. Tomorrow I may look for a trade on gold. I'm not gonna have any setup on DEX on EU at all because EU DEX is plumping. I don't think there's gonna be no setup until like Thursday or Friday or potentially next week. Right. So I don't think I'm having any setup until next week for EU and DXY. But on gold, there may be a potential opportunity this week because gold looks very nice. Go to gold right here. Candle, it could be definitely a pop over the old high. You can definitely just go break down below the old low because we did push out the high, and we push out the we push out the high here, push out the high, push out the low, but we haven't made a stable low here yet. So we could definitely see some sort of a plummet to the drone liquidity, eventually go from there on forward. So yeah, thank you for watching. Make sure you guys like, comment, subscribe, share. Join us down below, and I'll see you guys later. Peace out.